we've been in a kind of an economic stagnation for the last decade or, decade and a half, 2 decades. It hasn't been a high innovation time. It hasn't been a high growth time. And I think we're gonna transition into one where there is like tremendous growth, tremendous innovation. And that's actually a current that will boost Bitcoin as a monetary asset. And so these are actually, I think, very large scale trends that are going to change all markets, not just Bitcoin, but that will really carry Bitcoin.
I got an interview, in fact, 30 minutes ago with a major French newspaper, and they were telling me that Bitcoin treasury company sector is slowing down. I was like, okay. Have you heard of STRC? And no, they have not heard of STRC. It's the biggest financial newspaper in France. They have not heard of STRC. Imagine how early we are. Bitcoin is going to 30 trillion and STRC is going to be the reference benchmark rate for credit markets in the digital capital markets era.
Tyler Rowe here with BitcoinTreasuries.net. I'm joined, as always, by Alexandre Laizet of Capital B, and today we've got a special treat for y'all with Stephen Lubka, who's Investor Relations VP at Nakamoto, joining us. It's great to have you both, I guess, in the same room, so to speak, and this one's going to be a banger. I want you guys to kind of drive things today. But to start off, we're kind of recording here on a week where STRC ATM is kind of doing what it's been doing for the last couple months. I'd be surprised by the amount of money Saylor's been able to raise on STRC if it hadn't, followed the same pattern that it's been holding. But it's not even lunchtime. He's raised an estimated over 1,000 Bitcoin today. I think tomorrow is going to be a banger. The day before the ex-dividend. Capital B, you guys just announced another fundraising round. We've got Kevin Warsh suddenly on the tip of everyone's tongue as he's going to be stepping into the Fed chair role. But let's get into it. So, our tracker at Bitcoin Treasuries has the STRC ATM over 6,000 Bitcoin funded essentially over the first 2.5 days of this trading week. What do you guys think? Is this sustainable for Saylor & Co.? Stephen, I'll throw it to you first. Sure. Is this something we're going to see every month before the ex-dividend, or will the market finally, when is enough stretch for everyone's portfolio?
I think, so it's been very remarkable. Obviously, I think I just looked there's been 1 million shares that have traded today. I think it's only 11. It was 4 million yesterday. So it's been, a pretty active market, a little below like last month where it set records, but still very good numbers, and we'll see where it turns out. I think it's a scenario where as long as So what has happened? What happened last month is after the ex-dividend date, the price fell to like 99.5. And so if you bought it, you arbed 0.5%, right? I think as long as there are conditions like that where it's not falling below 99 on the next day, there's going to be like capital that chases it into that ex-dividend date. And I know Saylor's doing something where he's also trying to get a bi-weekly or bi-monthly ex-dividend date, and that could also affect it. But I think as long as that happens where money can come in, maybe they don't get the whole 1%, maybe they get 0.5%, maybe they get 20 basis points. But either way, I think that draws in more capital than there is demand. Even like there's native demand for stretch, and that's there and that's large. And then there's this other kind of speculative demand. But both of those will come in. And so I think you do expect this more for a while to come. Whether that lasts forever, I don't know. But I think for the immediate future and the medium-term future, I think it's likely that we continue to see it. And so it becomes a big accumulation engine for MicroStrategy. And as long as Bitcoin goes up over time, like he's comfortable to keep expanding that leverage ratio.
Yeah, Taylor, I used to think that I was very bullish, and every day, every day I get more bullish, and it's more and more. And what gets me more and more bullish is the information asymmetry that is building up there, because as much as stretch is being distributed, as much as people see that they can have a 2-digit performance with less than 2% volatility, you see that that product is distributing at a scale that was not even imaginable 2-3 years ago. And it's thousands of Bitcoin per day. And that's like more than 100,000 Bitcoin in the start of 1 year. Strategy is heading to 1 million Bitcoin. It's headed to 2 million Bitcoin. And, the first thought is always, this is not possible. It's not sustainable. The thing that people miss is that fiat is unlimited. And as much capital strategy is accumulating on its balance sheet, as much credit they can issue, and as much fiat currency is created into existence. And that's something that is not perceived because a lot of investors in STRC, they are lending against their assets portfolio, they are lending against their Bitcoin to create fiat money into existence, send it to strategy through STRC, and strategy buys more Bitcoin. And then it's, oh, but Bitcoin cannot have a sustained annual growth rate of 20-30%. The point is, strategy can leverage its balance sheet to 20% or 30%. What that means? That means that strategy can have those creations of fiat currency by market participants that want to lend against their assets and buy STRC. So by definition, there will be 20-30% of money creation out of the Bitcoin assets that people possess, and that will flow back into Bitcoin again. And so I think that everywhere I go into the conferences, I was in Paris a few weeks ago, I was in Madrid just 2 days ago, and yesterday. And every time I say, if you have to remember one thing out of that conference, it's STRC. And why I talk so much about STRC is because that is the biggest opportunity as well that we have at Capital B to have such type of instruments over in Europe where there is no such type of offering and there is no such type of possibility. And even Europeans that want to buy STRC, they have to pay the US withholding tax, 30%. And so even the exact same type of product, and of course it would need to be adapted to a European context, it's a massive opportunity. And I think that people don't realize that. And when I got an interview just, in fact, 30 minutes ago with a major French newspaper, and they were telling me, but the Bitcoin treasury company sector is slowing down. I was like, okay, have you heard of STRC? And no, they don't know. They don't know. It's an economics, it's a financial newspaper. They have not heard of STRC. It's the biggest financial newspaper in France, in fact. They have not heard of STRC. So imagine how early we are. Bitcoin is going to 30 trillion. Strategy is going towards the trillion, 2 trillion, 3 trillion market cap. And STRC is going to be the reference benchmark rate for credit markets in the digital capital markets era. And the companies that are able to issue that type of product will be including in those benchmarks from the institutions that realize that opportunity. And all of that demand is going back into Bitcoin. And every day that passes, I see more and more of this, and it's a more bullishness, Taylor. So
yeah, I think we undersell, some of the, the tax consequences of being able to access Stretch just because people have access to American capital markets. There is a value prop to similar type products being rolled out in different jurisdictions. I think even like Strategies had a hard time rolling out a Canadian product. Like there's obviously a lot of demand there that's tapped up. Like you said, European markets certainly. There's a lot of things I think about when seeing the way Stretch has been able to grow in size. I think we're over $7 billion now in total notional value on Stretch, and the preferred equity market was always kind of like a black sheep of equities, where you had a lot of uninteresting products, I would say, from an investor standpoint. And I think Stretch has really shown that there is an appetite, and preferred equities can be that vehicle to providing, a ideally stable instrument that pays dividends. And we've seen with 80% of the total size of Stretch being, as Taylor has said on quite a few occasions, that 80% of that, the inflows have been from retail. I'm curious to see a couple things. I think a lot of the institutional bid so far has been Stretch being accumulated to be put into these indices that track preferred equities and dividend paying equities. So, given that, uh, I wonder if what's the market response going to be? Are we going to see more kind of traditional finance trying to stop this thing? We saw the Morgan Stanley MSCI indices, um, put out some negative advisement on Bitcoin treasury companies being added to their indexes. Some of that blew over, but time will tell whether or not they reverse course. But I wonder if the same thing is going to happen with some of these preferred equity indices. Doesn't matter, are they such a small scale that the indexes don't matter as much for this type of thing? But I mean, a lot of these indices have to buy preferred equities, and as basically they're just going to become derivative products of Stretch with the way that STRC is growing. How do you see that, Stephen?
Yeah.
Do you think there's going to be pushback, do indices matter for this?
So it's interesting. I think throughout Bitcoin's history, there's been a lot of pushback across the board, right? We've seen, from the time it was small, we've seen various levels of opposition. We've seen hurdles. Obviously, Bitcoin has overcome those in general. And so I can understand why people kind of expect more of the same. But I think there's another point of view that we actually just got back from Vegas, and when we were there, Nakamoto, we hosted Deal Day, which was our first institutional summit at the conference, and we had 21 different Bitcoin companies, including everyone here, and we also had 25 banks and funds. And among those were large names like TD and Barclays and other large banks. And what I saw there is that there's real interest from these providers, right? Morgan Stanley, who did the strategy pushback, a few months later, they launched their Bitcoin ETF that's growing very successfully. And, at the event we hosted, there were a lot of banks taking meetings with a number of treasury companies. We had most of the, I think all the top ones there. And they were interested, So on one hand, there's been this history of pushback. On the other hand, there's a lot of engagement from those players in Bitcoin, in the treasury space, in this world. And so I could just as much see a world where like they scale up into these areas, and treasury companies have been some of the best customers for some of these banks. All of the ATMs and all of the preferred offerings and all of these instruments, they need capital markets partners. So they're very attractive partners for a lot of these names. So I'm not holding out on like a wide scale of pushback, because I think these are appealing products for these kind of financial firms that in an era past would have opposed Bitcoin. But it feels like that era is behind us.
It really does, just bullish signals all around. We kind of forget that the last 2 years so many structural things have been shaping up well for Bitcoin. I think even the Clarity Act, while it's maybe not, Bitcoin focused, I think it matters that, there's more of this posturing by the US government that they're not going to be adversarial to Bitcoin. And I think it lays the framework for, the next administration, from tampering with crypto markets broadly, which obviously Bitcoin is the dominant player there. So,
Yeah,
um,
you want to integrate these things into the system as it is under this administration. That's your protection from, as long as the big banks have ETF products and revenue streams from this industry, as long as the Clarity Act is passed and they're making stablecoin money, uh, it's a lot harder for a subsequent administration to come in and like roll back those postures.
yeah, totally. I'm curious. Did you guys see the Coffeezilla video where he is attacking STRC? Did both of you see that?
I
Yeah,
haven't watched it, but I know I saw clips.
Yeah, yeah.
yeah, it's kind of incredible, and it's kind of similar actually, because when you see the Clarity Act, the only thing I see with the Clarity Act, by the way, is that STRC is going to have effectively a monopoly in the US with SATA on the potential for, it's not stable coins, but very low volatility instruments with double-digit performance potential. That's the only thing I see, is that they are debating on just stable coins that should not give interest, and that should be those gifts to customers and this kind of stuff. And the only thing I see is a massive opportunity for digital credit, because that will effectively be in digital capital markets the standard way of having the equivalent of monetary fund that yields double-digit performance. And that tokenized DeFi will make that a stable coin with a double-digit performance. And actually, in the latest interview that Michael did, there was that question about, is there a risk that DeFi players lever this up too much and could affect the market? And I think the answer was quite interesting, is that in fact those players today represent about 300 million, which in fact, compared with the volumes, that's very small. When you think about it, like in one day, STRC does 300 to 700 million. And on top of that, you have like BlackRock with their indices and funds. They have as well 300 million. And on top of that, you have a lot of hedge funds that are doing those arbitrages, and they do like sometimes they can even do 1 billion a day. So that's just to say that those intuitions can be difficult. And in the Coffeezilla interview, that constant intuition that a company, all the value of a company is based on its future cash flows, this is completely impressive to see. Every time I see that, I cannot understand why someone cannot consider the assets of a company of any value. And when Jeff did that amazing job of telling him, look, in the insurance business, the claims are paid with the premiums of the other clients of those insurance companies, and those are the cash flows and so on. And it's like, okay, so the insurance company effectively is a very comparable entity. And when you look at strategy, not only they have the future inflows of STRC, the future potential inflows of the ATM, but as well, of course, when Michael and strategy and Fong mentioned that they are able to sell some Bitcoin to buy more, I think that completely changes the structure, because it's like playing chess with five games in advance. Like, because first of all, saying that will increase the rapidity of the inclusion in indices. It will increase the velocity of the credit ratings. we can already see that this in discussions, even on our side when we talk with institutional investors, they ask the question. Well, it's very easy because, well, yes, strategy can use the Bitcoin they have, of course, that's for sure, and that's I think that's going to change as well the market, the perception, and the perspective of traditional market players that yes, strategy can use the Bitcoin. And as long as strategy is a net accumulator of Bitcoin, it just, as Michael says, like, if strategy sells 1 Bitcoin and buys 10, it's exactly the same as buying 9. It's exactly the same. So I think that the market is evolving, becoming more sophisticated. Even Coffeezilla said like that he believes that this will have a lot of success. It's just that I think a lot of the arguments were about the form, like not the substance.
Yeah.
And it just another thing that makes me more bullish because you saw that interview got like 700,000 views, like almost 1 million. So like and these interviews will flow, like there will be more and more of those, and we are just at the very beginnings of this. And strategy, imagine with this STRC is already like almost at 1 billion of volume per day, like already. So imagine in 3 years or 5 years, this will become a monster, and people also completely underestimate the other companies that could have that possibility to issue those types of instruments.
Yeah, what's your take on the? Go ahead, Stephen.
Something you said earlier, I kind of wanted to touch on, and you mentioned you were talking about the growth rate of fiat as like another variable in like the hurdle rate on STRC, right? So it's like, Bitcoin has to grow X percent to annualize to stay on top of, to stay on top of the yield for STRC. But, one of the factors you mentioned is that actually there's a fiat debasement thing there, that if the money supply is growing at like 3 or 4%, on average, assets are going to increase that much. The STRC liabilities are fixed, and so Bitcoin really only needs to go up in real terms. That amount minus the debasement, the kind of growth rate of the money. The reason I kind of touch on this is I think we're just entering one of the most dynamic economic periods ever with kind of the takeoff in technology. There's a lot of exciting early stage technologies that's getting a lot of attention, AI, robotics. I really am a believer that we've been in a kind of an economic stagnation for the last decade or decade and a half, 2 decades. It hasn't been a high innovation time. It hasn't been a high growth time. And I think we're gonna transition into one where there is like tremendous growth, tremendous innovation. And that's actually a current that will boost Bitcoin as a monetary asset. And so these are actually, I think, very large scale trends that are going to change all markets, not just Bitcoin, but that will really carry Bitcoin higher. And that, in a sense, STRC and the preferreds are instruments that are built to arbitrage that in a sense, right? Like if growth picks up, if currency issuance picks up, it only becomes easier for it to pay those liabilities. And so I think like, we've been in a regime, we've been in an overall global economic regime for Bitcoin these last 10 years, but I think that's changing, and I think it's going to be one of the biggest drivers.
Yeah, I want to bring up one of your tweets here, Stephen, actually, that I got kind of in that same vein. Let's see here. Okay, so you said, talking about AI, your base case is that it has to turn into a larger speculative bubble than the .com for two reasons. You said, one, it's far more economically impactful. You had to have a vision to see a website in 99 and imagine what would come. And that's not the case with AI. And two, you said everyone has a brokerage account today. In the 90s, maybe 10% of people had the ability to directly place a stock trade compared to 50% say today. Obviously we all see the deflationary pressure that AI is going to bring, Stephen. It's also like pretty clear to see that, a bubble could be kind of forming with the .com bubble. even though that bubble burst, obviously out of the ashes, Microsoft, Google, Nvidia now today, and a lot of the players from those early days, are the largest companies on earth. So I assume you think that that trend is that I guess kind of mirror is going to play out with the AI trade. But how do you balance, I guess, that this bubble mentality, the deflationary pressure, and tying those into Bitcoin? How can that make hard assets um, attractive in that type of
Sure.
future?
So, and let's be clear, like when I say it's going to be a speculative bubble, that's not a dirty word for me. Every technology that has ever been invented has had a speculative bubble, and it grew the technology. And people forget that before the peak, like it was the best performance period for U.S. indices ever. And so when I say this, I'm saying that period is more or less ahead of us. And it has to be. I think when you really look at the sort of economic transformation we're going through, the internet was effectively connectivity. It was making it so the whole world could communicate and could connect. And that's a very transformative technology, and that's very powerful. But that exists here. And what AI is, it exists a level higher than that, which is the source of economic growth. The source of economic growth is human intelligence and human innovation. All economic growth that has ever happened started first in a human mind. And so what AI is coming to do is coming in at a higher level, and it's scaling the amount of intelligence, regardless of how you want to define intelligence, either intelligence or something which looks like it. But the amount of something approximating intelligence that can be deployed, that can be scaled, that can be, you just buy, you build another data center and you have, 10 times more. And so with that, I think we see a manic economic period that will be, I think, really surprise people. But the reason that plays into Bitcoin is because when you have that sort of, like, when you think about a fixed money and you think about a fixed monetary asset let's say in a hard money standard, right? Let's say there's no fiat. The money should grow with the growth rate. If the economy grows 5%, the hard money grows 5%. If there's no fiat and there's no other noise in the system. Hard monetary assets, that's why gold has tracked, growth over time, right? It's not that it's done anything. It's not that it has cash flows, but it has gone up so much because it has grown with the economy. Now, Bitcoin's the same sort of asset. So if we're entering this very, very enhanced economic period, which I believe that we are, that becomes a tailwind for Bitcoin. But we do live in a fiat system. And I actually think that makes it even more so, because what that deflation will do is it actually will be covered to print even more money. If you have 5% deflation a year, you can print 7% of the money supply and only have a 2% inflation rate. Those are obviously rough numbers. The economy is more complicated than that. But the more deflation you have, the more money you can print without triggering an inflationary crisis. But that printed money still plays into the asset prices. It still plays into Bitcoin. And so I just see us entering this period where growth will be high, like really high for the first time in many years. And also currency issuance will be high. And I think Bitcoin will be positioned to just benefit from that in a tremendous way.
Hmm. Hmm. Is that how you see it, Alexander? Similarly?
Yeah, yeah, it makes a lot of sense. And I think that's also accelerated by the fact that, yes, there is so much growth. And at the same time, nobody really knows what will happen. And if you don't know what will happen, what would you choose as an asset to buy? Well, you would likely choose the one that has an information that never changes, which is the 21 million cap. And that's something that has actually followed the bubble burst of the 2000s. Is actually in the next 10 to 20 years is a replacement of 50% of the largest companies in the US in terms of the S&P 500. And so, which companies will you invest in if half of them or even 70% of them will literally have 50% of their business go out because some kind of AI software is coming and has replaced from one day to the other the whole service of a company. So, and we've seen that already with some software companies. From one day to the other, you see like there is one AI model that arrives and boom, it obsoletes from one day to the other the whole future cash flow potential valuation of a company. And so for a company, I think as well over time, it will become more and more strategic to hold Bitcoin to not only have those cash flows valuation in the future, and at the same time, I think that companies are so not focused on Bitcoin that we will have so much opportunity to accumulate more. And so if you mix together what we've discussed in terms of digital credit, together with the fact that at the end of the day, the wave of AI will have the fruits of all of that capex investment into the AI industry flow into the most brilliant minds, mostly, I guess, in the US and internationally as well, in some of the China tech sector and so on. You can imagine who those most brilliant entrepreneurs, what they will do with their accrued money. They will not keep that in dollars, I guess. So they will at least allocate quite a portion to Bitcoin. And I think like you can see that already. Elon Musk, yes, he has not continued to accumulate more Bitcoin, but he's had Bitcoin on the balance sheet of companies. So you can see that this will just continue to happen. And the AI wave is actually a Bitcoin wave, in my view, over time. And at the same time, I think that in the very short term, that's also why you have a bit less liquidity available for allocation to Bitcoin because there is so much capex allocation to the AI sector. And that's such a great opportunity for us to accumulate Bitcoin at those levels.
Yeah. Yeah, you guys have me bullish. Whenever I listen to the two of you talk, certainly have lots of reasons to be bullish. I've got a couple. I want to get to the AI and how the pivot from some Bitcoin miners moving to AI. But before we jump into that, I'd love to get your insight into Kevin Warsh. You know, he's coming into the Federal Reserve now. It's extremely likely he's going to be as chair in the coming week, and replacing Powell. I've been diving into some of his public comments over the last year, and recently he's talked a lot about the deflationary pressures of AI, but also that we're kind of at the at the beginning of a like you kind of alluded to, Stephen, a kind of explosion in productivity that's just going to bring a lot more prosperity, and he sees the U.S. as a key leader in this economic landscape. And then I look back at some of his comments last summer where he was extremely critical of the current, not just Powell, but the current constitution of the Federal Reserve and the way that Congress is spending too much. He says the Fed's kind of enabling that. He thought they were reckless during COVID by dropping interest rates so much, and that was kind of an economic calamity. He's talked about not wanting to have a large balance sheet at the Federal Reserve. So can he hold I guess those more hawkish comments in a delicate balance with his other perspective of being so bullish on AI's deflationary pressure and what it's going to unlock economically? Or I guess how do you see it playing out? How will he balance this thing? Because every public statement before prior to the last month or two has been quite hawkish, is the way I've read it.
Yeah, so I think I wouldn't index too heavily to what he was saying before, just because he was saying that in a different environment. And he was correct, in 2021, post-COVID, they would have been better suited to have raised interest rates earlier. And he was speaking to that environment. I think when you look at this environment, now, let me be clear. I think right now, cuts are not they're a low probability. I think Trump wants to see cuts. I think Warsh was prepared to deliver cuts. However, with the recent inflation print we saw this morning, now there's a big asterisk here, and I'm going to get to it. But with the recent inflation print, basically unemployment's in line, inflation just ticked up. It's hard to imagine that they're going to cut into that environment. However, the big asterisk is that the inflation print is driven by the war in Iran. It is not that inflation suddenly, I mean, it did in a certain sense, but like once the war resolves, one can expect that to come down. So I think, Warsh is going to come in. As long as inflation is high and the war is continuing, I'm hesitant. I don't think he's probably going to deliver cuts. I think there are cuts that could come once that resolves. But I actually would want to I think that the power and the influence and the relevancy of the Fed is lower than it once has been, and I think that's part of the AI story. I really believe this, but I think we lived in like from 2010 to 2020. This was a low innovation, low growth environment. This is when you had Jerome Powell saying one of the biggest problems we have is we don't have enough inflation. The only technology that was like, you could buy SaaS companies. In fact, I believe that the reason crypto, specifically like non-Bitcoin crypto, became so popular is because there were no early stage emerging technologies to invest in, right? And so crypto offered the appearance of that, of, oh, invest in these coins. It's like investing in an early stage technology. You'll have huge returns. Ultimately, they didn't deliver that because they weren't that. But it simulated that during an era where that wasn't so much available. But now that that's different, um, the higher actual growth is, the more assets like Bitcoin and the market can go up, even if interest rates are higher. And I think that's the environment we're in. So I think I'm not sure how many cuts we're going to get this year, but I think it doesn't matter as much as it once did. And I think asset performance is going to be quite strong.
Yeah. What I'm hearing is everything's bullish for Bitcoin. Yeah, it'll be interesting to see, and it's like I guess it depends how quickly AI is really impactful on the real economy. Obviously, we've seen great productivity increases, especially among, I would say, software engineering. That's led also to some layoffs, in tandem with that at a lot of the big tech firms. But yeah, certainly bullish on the trends. Do you think? Do you think a lot of people have been speculating, the Fed or the Treasury, with Besant and Warsh, who have been at least neutral to positive, Besant more so positive on Bitcoin. Do you think we could see the U.S. actually start to stack Bitcoin in one way or another, in the near term, Stephen? Or do you think that's still, something further off into the future?
I hope so. I don't know. I hope so. I would love to see something like that. I think there have obviously been some political challenges to that happening in the near term. I know there's been some rumors going around. There's been some stuff being floated. Um, but I'd love to see it. I don't know.
Yeah, yeah, totally. What's your take, I guess, on from the EU perspective? Um, you may not be as into the nitty gritty as we are on what the Fed's up to, Alex, but I'm sure you pay attention to the macro landscape. Is everything in Europe kind of downstream from that, or have you seen signals in Europe from maybe the European Central Bank that have been, bullish signals for you? In terms of the macro environment and how they're going to approach AI in the future.
Yeah, we speak sometimes about the Roman Empire and how it has ended and so on. And I like to think of just the Roman Empire changing of center of gravity and living both in Paris and now in the Middle East in Abu Dhabi. I've come to realize how we are really living in a great empire of the United States, and all of the other central banks are just administrated by the Fed. Even if they don't say it, all of the other major currencies are stable coins of the US dollar. and everything is downstream of the USD and of the Fed and of the US military. And in some way, that's quite interesting because we can see a form of revival of that empire, and it may have another 200 or 300 years away with those Venezuela and the situation in the Middle East. People don't realize, but that's another part, Stephen, that in terms of growth, in terms of potential for the US economy and for the allies of the US economy, that you have Venezuela that represents in terms of oil reserves, like Saudi Arabia plus United Arab Emirates together, and Saudi Arabia and United Emirates, Emirates are allies of the US. So I think the fuel for the economy to grow is there. It's just that, of course, it goes through tension, it goes through conflict, and we are right in the middle of that right now. And of course, when you have high inflation with high interest rates, people have less liquidity to invest. And at the same time, you can definitely see the prospects by which the US can still lead and lead in AI and lead in technology and lead in Bitcoin and lead in tokenization of financial assets and lead in the financial industry and lead in the reindustrialization of the country and have cheap energy. I mean, that's very bullish for the US economy. And what's bullish for the US economy and the US savers is bullish for Bitcoin. And that makes me again more bullish, Taylor. So I would say that it seems like in some way what the Fed does has less and less effect. It feels like that because in any way, even if they don't move the interest rates, it seems like the United States government has ways to in any way print money or to have uh, some kind of acquisition of a country that has like oil reserves. And so it seems like in a way the Fed has less and less impact, and that if you have 5% inflation with 5% interest rates, well, what's the impact of that? I'm not sure. And so it seems like market participants are just organizing with this, and that they are accepting that higher cost of capital, and that, as you said, Stephen, like the growth is, and with the AI stuff, you can have more money printing with higher interests and so on. And so I'm not definitely sure of big movements, as you said, Stephen, on those interest rates and on the movement of the Fed. And specifically, however, I would say that I'm a big subscriber to Nothing Stops This Train. And, whenever you are in doubt, you can do two things. You can suspect that there will be more money printing and buy Bitcoin. So I think that's the key takeaway. All political parties have no other way to pay the interest of the debt than to print more money. And so it will happen in any way. And so whatever the interest rate, the interest rates in Argentina were very high, and still the money printing is extremely high as well. And so I think that matters less and less. And a good example is Bitcoiners. Like how does the interest rate over the last 2 years has impacted strategy, for example? Like they are accumulating Bitcoin as fast as they can, and the interest rates have not moved significantly, and still it's more a matter of product, of distribution, of scale, and as you said, Stephen, in terms of the innovation that a player can provide to grow. And if a player provides excellent product market fit, it will grow extremely fast, whatever the interest rate. So
I think
um,
there we're coming out of this era. I totally agree. We're coming out of this era where there just was so much less of that going on, and so the decisions the Fed made carried much more weight. In this kind of middle decade, with low growth, with low technology innovation, if the Fed's cutting interest rates or raising interest rates, that's the biggest thing in the room, and so that's moving the markets around. I think just where we're headed, economic forces are going to carry more weight than if the Fed goes up 25 basis points or not. Like there just are more important things going on, and I think that's going to flow through to benefit. It's going to benefit Bitcoin. It's going to benefit the stock market. It's going to benefit all the people. It's going to benefit the U.S. So I think it's a very optimistic time to come into, and it's one where if the Fed isn't going to lower rates, I think we're still going to keep growing anyways.
Yeah, yeah, that tracks. Like I do wonder, in even in as we're having this conversation, I do think, the economic, potential over the next decade is absolutely crazy. And do you guys think that that can kind of save the U.S. Treasury? Who's trying, Besson's probably there trying his best to refinance the ever expanding debt and deficit longer term. Do you think AI can be kind of this get out of jail free card for the Treasury that's kind of trying to manage the out of control spending coming from Congress?
I think it'll kick the can. I don't know if it's quite a get out of jail free card. You'd have to have you'd have to have GDP going to double or triple for something like that. But do I think it extends the runway compared to if it wasn't here? Of course. It's like there's basically been nothing stops this train, asterisk, a growth miracle. And it really means a miracle. Like there has to be something that completely transcends the conditions that have come before. And I'm not. I think. I mean, if that happens, that happens, and in that world, it's likely a very good world to live in. But I don't know. I don't. My base case is not that we see that currently. But like even if GDP doubled, that would be incredible. I mean, that would be incredible. There'd still be a debt problem, and that would be, I think, like a right tail outcome of like, wow, this went like better than most people could have imagined. So I don't know that it's a get out of jail free card, but I do think it definitely gives some more breathing room. But again, and it's like, I think some people like, they don't like that because they have this model of Bitcoin where it's like, oh, we need like the US to go bankrupt, and that's how Bitcoin goes to $1 million. And I don't think that's right. I mean, there are scenarios like that where I think Bitcoin could benefit. But most of Bitcoin's growth has grown alongside a U.S. that has continued to operate, and that will continue, right? Like even if the money printing continues, the debt situation gets kicked the can down the road, Bitcoin will continue to go up as it has. So I don't relate to that as like a a final destination that has to occur, or the Bitcoin thesis is in trouble.
Yeah, I think there's a lot of roads to so-called hyper Bitcoinization, and I'll cop to being guilty of being all over the map in the way I've kind of had a mental model for that framework over the last 5-10 years. So I just want to get to some comments before we're coming up against our time, and a couple more points I want to hit. We've got Tomazek in the chat is saying Steven is back, bull market confirmed. and Jake also saying good to see Steve back. And we've got another one saying Steven and Alexandre are making me very, very bullish. So yeah, thanks guys for providing that bullishness. I do want, before we get out of here, I do want to talk real quickly about the companies you guys are at. But before we do, just a quick maybe just your quick hit initial reactions on some of these larger Bitcoin treasury companies, or companies that treasury Bitcoin that were miners, such as Mara. You have Bitfarms, who are really pivoting to AI data center models. Obviously, like they're chasing money, and they have large operating businesses that stand to benefit from this explosion in AI. How do you think about that as far as impacting the security budget for Bitcoin? Does it matter? Is it good for decentralization, as some people have made it out to be? Alex, I'll throw it to you first.
Yeah, so for me, there are two main elements. The first one is that everything is good for Bitcoin, and it's just decentralizing Bitcoin mining, making it more profitable for other miners, and there shows the magic of the difficulty adjustment that, in my view, is like just that secret sauce that is really incredible. And thank you, Satoshi. Frankly, that's really incredible. And the second aspect is that actually hedge funds have more and more impact in the markets. And you could see that with the amplification of the rally in gold, in silver, and then the amplification of the rally into those AI stocks or the data centers, as you mentioned, and so on. And in fact, we could see that last year with the Bitcoin treasury companies. And what I'm seeing, what I'm observing is that those same hedge funds that have been playing the downside on the Bitcoin treasury sector over 6 to 9 months from mid last year to early this year are turning to the other side. They have made a lot of profits in gold, they have made a lot of profits in silver, they have made a lot of profits in AI. And guess what type of companies have the most potential and are at almost their lowest valuations? The Bitcoin treasury companies. And that's part of the deal that we've done this Monday. Is a 15 million euros deal with 17 million US dollars, and a potential optionality to increase the size to $120 million additional. And what is this? And this is with global institutional investors. And what is this? Is institutional investors looking at Bitcoin as going to get back up into a cycle, a bull run, and maximizing the upside potential of the convexity of what Bitcoin treasury companies can do. And when you understand that, in fact, some hedge funds are so big that they can, in fact, even have some impact on a Bitcoin market, you can understand why Bitcoin treasury companies can provide a major upside after the gold rally, after the AI rally, and how that next cycle of Bitcoin and Bitcoin treasury companies can be very significant as we turn into the next year. So yeah, that's what I make out of the kind of K-shaped recovery that we see out of this small Bitcoin bear market. You know, I've talked with some investors that tell me that they don't even think it's a bear market because it's like 50 to 70%, 50 to 60%, and that's like one volatility. It's like the S&P 500 going by minus 10 to 15. And so, in my view, that's really what we see is that you have a couple of companies that have maintained their focus, their conviction, their structure, their organization, and that are in fact accelerating like strategy, and the companies that, in my view, adopt that playbook. And in our case, that's what we are focused on. And, you know, those companies will do extremely well because they are positioning in the best way for that next wave. And on the other side, you have players that are logging off, like as you said, they are not really Bitcoin treasury companies. They are companies with Bitcoin on the treasury, and that's great. But I really hope for them that they come back in Bitcoin in time, because it would be sad for them to base their whole valuations on future cash flows.
Yeah. So I think with the miners, right? I think the thing to understand is like, so for the last few years, the miners were able to bid up, they were able to acquire like basically premium energy resources across the US. These are like high quality, modernized data centers.
And the reason is there was just there was a glut of power. There was more power than there was demand. And, they could just kind of step in, raise money from capital markets and acquire those resources. With everything that's happened with AI, it puts a premium on a certain sort of power resource. So Bitcoin mining and AI have different preferences when it comes to energy resources. A data center needs highly sophisticated, so it needs data center power needs to be stable. It needs to be 24/7, and it needs to have high bandwidth, like extremely, extremely high bandwidth internet. Bitcoin mining, while they both use lots of power, Bitcoin mining can deal with intermittent power. It doesn't have to be stable. It can turn on or off, and they can use very low level internet, even satellite internet. So they can be in the middle of nowhere. And so what you're going to see is the miners, they basically they own the resources in this AI gold rush. So they're selling those resources, they're pivoting, they're just doing what's kind of in their financial interest because they have a very scarce resource, which are these power resources that, there's just a ton of demand for. What it'll do is I think a lot of the public miners will pivot. They're in the middle of the pivot. They're going to continue to pivot. That's what those data centers are good for that. It will then increase the opportunity for new miners to enter the playing field. So as these people shut off hash rate will, at least in theory, come down or will go up less fast. And it'll create a better financial incentive for a new crop of miners to come in. And I think that new generation of miner will come, and they will be much more cockroach-like, is I think the phrase that Troy Cross once used, but that they will be off-grid, they will use choppy power, these aren't going to be like pristine on-grid data centers. They're going to be scrapping up energy at the edges because that's energy AI can't use. And those new miners, I think, will be very profitable and will do very well. It's just going to bifurcate the market. Now, this transition will probably take a couple years, but it's already underway. And it's an opportunity for people that really believe in Bitcoin and want to be in the mining industry. Obviously the public company miners in many cases, they're just doing whatever's going to make them the most money, which, if you're a public company, you can't blame these people for that. That's their incentives. But I think it'll all kind of shift over the next few years. So I don't think it's a risk to Bitcoin. I don't think it's a security budget problem. New hash will come online. That is the difficulty adjustment, like you said. It's the beauty of that. But it is a transition. And I do think it could be more decentralized because I think grid space in the US will command a very strong premium in the world to come. And so I could see hash rate going, Google's not going to build a data center in, the middle of Colombia, right? They're going to use like US infrastructure. And so all of these global sites, I think, become much more interesting for Bitcoin mining.
Well said. I'd be remiss before we let you go. I know we're against our time. If you guys have to drop off, I get it. But tell us, we went from paper Bitcoin summer last year, Stephen, and then you stepped into Nakamoto. Obviously, Bitcoin treasuries were under some stress. How has that journey been for you? What's been exciting day to day? Working in investor relations at a Bitcoin treasury.
Yeah, absolutely. Man, paper Bitcoin summer was fun. That was a blast. I had so much fun, just kind of at that moment in time with everybody, kind of making that. What has been, obviously it's been a very volatile, it's been a tough ride in certain ways. Like, we went from like everything going up hundreds of percent, per month, like just some of the most incredible growth you've ever seen to, a real, challenging bear market. It's, one of the things that I've seen is like, despite so my job at Nakamoto, like, as you said, I run investor relations. For people that don't really know what that is a role that is mostly like based in meeting with analysts, banks, institutional coverage, funds, these sort of things, right? So a lot of my job is those institutional conversations. kind of securing coverage for the company. We actually recently got covered by TD. So TD initiated coverage on Nakamoto with a buy, which was awesome. And we also are covered by 3 other firms. So we actually were able to secure 4 different banks have covered our stock, all of them with a buy rating. The others were Maxim, Siebert, and B. Riley. So I've been in those conversations and making that happen. And the institutional view on this is very different from maybe like the common internet sentiment or the retail sentiment. Like I think there's been a lot of like people in the retail market, people like the stock when it's going up and they don't like it when it's going down. And that's most of it. In the institutional segment, I think they haven't been shaken so much. I think they basically continued to move forward and maintain interest in the sector. TD has been a very interested participant. And despite the price, despite the volatility, despite all of that. And so just kind of interfacing with that and seeing that, it's like, gives some perspective on the range of the market. I'm of the opinion that Bitcoin has bottomed. I think, we bottomed a couple months ago. I was saying that, a month or 2 ago. Basically my moment where Bitcoin bottomed was when the Iran war broke out and the S&P went down 9% and Bitcoin didn't go down any further. If it was going to go down further, it would have done it during that conflict. The fact that it didn't sell off when the S&P sold off 8-9% shows the sellers were done. And since that time, it's done nothing but gradually, slowly, but trend up. It's just trended higher. So I think the bottom's in, and I think, what the price you pay as a Bitcoin treasury vehicle or as a company with Bitcoin in your treasury is that you're going to be very tied to the price of Bitcoin. You can't have the majority of the value of your company be Bitcoin and not be influenced by the price of Bitcoin. In fact, you want to be influenced by the price of Bitcoin because that's why it's going to go up when it goes up, right? That's just how it's going to work. So I think now that Bitcoin has bottomed and we're in this recovery, I think things will start to look a little bit better and be a little more exciting. But I think the sentiment has been good behind the scenes. I love the company. I'm so impressed by the team. We recently completed the acquisition of Bitcoin Inc. and UTXO. So these are 2 very iconic operating businesses with cash flow that give us more optionality on our balance sheet, whether that's paying debt, buying more Bitcoin, issuing preferreds, whatever that may be. Those are just options. But we get that optionality from the cash flow. And we also have a flywheel that we've been able to it's actually how we got here, but just between owning the largest Bitcoin media business in the world and our financial services business, those actually play in, both the revenue plays into the treasury side, but also the relationships and the network we've built on the media side, that all scales with the treasury. So we're excited about like what's to come. And, it took us, the company hasn't even been public a year, and we completed this acquisition. It was a big acquisition, and integrating those companies into the new operating structure. So we're proud of the work we've done. It's been a volatile market, but I think much better times to come.
It'll be really exciting to see, and you guys, went to market with quite a scale and quite a treasury of Bitcoin. So, yeah, with multiple entities under the bigger umbrella, seeing what you guys will be able to do in a proper Bitcoin bull market is going to be pretty exciting to see. I know I told you noon, Stephen. So if you need to drop, that's fine. Alex, I want to give you the last word on what Capital B has been up to. You've been a globetrotter all over, flying all around the world to conferences. We haven't been able to connect for the last couple of weeks, and I saw you raise some more money this past week. In partnership with Tobam, Adam Back, who's always been supportive of you guys. What's the latest with Capital B?
Well, I've been raising capital on the planes. Actually, that's true because we announced the raise of 15 million euros, a new one on Monday, and it was finalized actually at the airport. So that's how it happens, And
Let's go.
yes, there is no weekend for Capital B. The week at Capital B is 7 days, and and we are completely focused on maximizing Bitcoin per share with the digital credit strategy. We have currently about 3,000 Bitcoin on the balance sheet. We announced that those 15 million euros could enable us to go from 2,943 to 3,100 and more. And that raise opens up with a warrant structure that's very interesting. It's plus 30%, and again, plus 30% of those plus 30%, and again, plus 30% of the second plus 30%. And so that layers in additional capital raising as Bitcoin grows back up with that demand that we mentioned, in a way that we can accumulate 100 million euros more of Bitcoin. And you have to take that into context together with the fact that Capital B today has no fiat debt with respect to its Bitcoin treasury company strategy. And so on top of the fact that those capital raises have been priced at premiums and that the company has the capacity to force exercise of those options within 20 days when the conditions are met, that allows for a new engine for Bitcoin accumulation and balance sheet size increase at the exact time that we are focused on the rollout of a digital credit instrument for Europe. And that's our full focus. And that capital raise is to make sure that as we are focused on the implementation of digital credit in Europe, we have that additional capital already layered in as Bitcoin grows so that we can scale up digital credit as well. And to give you an illustration, as I mentioned, we are already headed towards that potential of 3,100 and more. And those 100 million euros, even if Bitcoin goes higher, that's heading us towards the potential, and it needs to, of course, subject to the Bitcoin price and subject to the market evaluation of the company and so on. That could bring us towards more of the 4,000 to 5,000 BTC with the digital credit potential. And those are exactly the levels where some of the largest investment banks, that among the ones that Stephen mentioned, that have worked with strategy, are definitely positioned to accompany a company like us. And so the great thing is that we have a lot of options. We have a lot of capacity on the equity side, on the warrant side, and on the capacity to issue a digital credit, which is our full focus, and to scale that up as soon as we as well raise towards the new levels. And that's the path for us to reach our targets of 7,000 to 15,000 BTC by the end of 2027. And that's my full focus. And all of that market context with the demand and the structural unsustainability of the current Bitcoin prices with such level of demand and such low level of offer in the market, together with great leaders in the space, such as UTXO Management that mentioned Stephen, that is a shareholder of Capital B.
Yes.
And I think people completely underestimate as well the potential of the leadership of David Bailey and Taylor Evans and all of the team. I think the team at Bitcoin Conference, the Bitcoin Magazine, and UTXO Management, and the whole experience network, and the focus on Bitcoin accumulation over time, and the focus on the best performing Bitcoin treasury companies in each region will pay a lot over the coming years. And I'm very bullish on everyone that's focused on Bitcoin. And I think around the table we are very much focused on Bitcoin and on digital credit. And I would like to highlight of course, the leadership there as well of UTXO Management, and I think that will also be of great success. So really bullish for the future, and Capital B, full focus on digital credit.
stuff.
you.
Good words to leave us by. It's great to see you know all these Bitcoin treasury companies and executives getting along so well, rooting each other on. Obviously, there's some friendly competition, but we're all ultimately at the end of the day building the Bitcoin network because it is the best money the world's ever seen. Thank you so much, Alexandre Laizet of Capital B, as always. Thank you, Stephen
As
Lubka,
always.
Nakamoto, for joining me today. Thanks to all the viewers out there. Really popular stream today and a bullish one at that. So we'll see you next week, you guys. And thank you guys for joining us.
See you.
Soon. Thank you. Cheers.